Welcome back, everyone. Today, again, around the markets. As usual, we're going to show you a quick overview of the European and US markets. I'm also going to show you some interesting ratio charts. So let's start with a quick overview of the AEX Dutch Netherlands index. So here we see a chart starting from 3 years ago. And when we're looking the last few months, we see that the index continue to have a positive outlook. We see the index as passed by this red resistance around the key figure of 800. We still see the index above the blue 50-day average and the orange 200 average, which is very nice to see that we can add again now a support, the support from the top of 2022. So I can say that this is the very first real support if the markets goes back. And when we progress in this month of March, this blue line, this 50 average, will continue to rise. And I think that this average will go to around the same high as the previous top of 2022. So this will mean that we have a support of the average and we have support of the previous high. So I think the first major support will be around that 820, 830 zone. This, yeah, for now, I can say that, yeah, for all Dutch components, I can say we remain very positive. We see a nice uptrend slope. So yes, I think this is very good for the Dutch actions. When we look at another European index, I take another tab and we will show you the BEL 20. You will see that this is a totally different look. The Dutch went really nice upwards. The AEX made a new high, and for the BEL 20, yeah, we still see the downtrend line from the same top of 2022. And we still managed to keep above this line the last 2-3 months. So this average line, this downtrend line, you can see it's just like an average as some sort of magnet. It's keep attracting, it's keep pulling at the index. And yeah, yes, we are above this downtrend line. Yes, we are now back above a descending orange 200 days average. But if we have a good look at this 3-year chart, we see the red rectangle around 3,800, 3,850. So I think that is a main big hurdle that we really need to cross. If that isn't the case, I'll still remain a little negative for the BEL 20. Of course, it seems that the really downtrend is ended. So if I take a quick zoom into this chart, you see it's really important that the index remain above. I'm going to add another green support. I'm going to look at some key points. I can say that, yeah, we have here the low, but we have here low, there low. I cannot take and add a rectangle to this chart around that area, something like this. Back, let me zoom again. This for me a key level to remain a little bit positive for the BEL 20 is that the index remain above the ratio of the value of 3,520, 3,540. So it need to be above the 50, 200, and I can pull and extend this line. So you see that, yeah, this key level, this is a key level, 3,540 here. So for the bell 20 is very, very important to remain above this, yeah, main supports, I can say for now, and the coming weeks, coming months. And it would be really, really nice if the bell 20 is able to cross over this red rectangle. I'm gonna extend also this this rectangle, excuse me. Voila, I will do it like this. So for the bell 20, you notice is a great difference around for the AX, who makes new high, really uptrend. When I have a look at the bell 20, yeah, the picture is totally different. We are saying this for months, for maybe a year already, that the bell 20 remains very, very weak. It's one of the weakest indexes of Europe. Another, yeah, index has really been added to the favorites indexes is the CAC 40, the index of France. And here you see even this index is much, much better than the AX from Netherlands. It's continued to make new highs. It's already made a new high, not the last few weeks, months, like the AX, but already make a new high in April 2023. And again, the beginning of this year, it's made a new high. It's crossed an important zone around the 7,600s, and it continued to move upwards like the AX. So that means it's above the 50 and 200 days. And last time I've added a Fibonacci. So I make the low of October 2022. I use the top of April 2023. So it's the 100%, 0%. And we are now approaching the first Fibo resistance around the 127 zones. It's about 8,200. So yeah, when an index, when a stock is approaching its of making a really new high, it's really hard to say, okay, we have to look at this zone resistance stop. So it's impossible when the stock and index is making new highs. So a way to have some guidance is by using a Fibonacci. So you're looking at important top bottoms and you're creating a Fibonacci niveaus. So we are coming up with the 8,100, and if the markets keep remaining upwards, keep remaining that upwards pressure, if we moving this AX, we are seeing targets, the 161 targets is around 8,800. So yeah, but for that it really needs to target and cross this level around 8,100 and nice. But for the rest, yeah, everything remains very, very nice for the French stocks above the blue and above the orange line. And again, our main support is the 7,600s. And this supports, we have a sort of, double support zone, a cluster. So the horizontal zone, and we have the 50-day average, who is already around the same zone. So for the CAC 40, everything looks very, very nice. We also take a quick view to the German DAX 40 index. Really, really powerful. We are saying this from January. That's the DAX seems one of the better indexes of Europe. Here we see an extended triangle. That's in February it have tested this line, but a few days ago it crossed above and it's really taken off. We see a great difference between the price and its 50-day average, and sure about this 200-day average. So it's really, really extended. So maybe it's possible that this index will have a test of this breakout line. So yeah, of course, this is our main support. But if we take a view and we're gonna see at the charts, and well, we can maybe add here a little support zone again around the same level as a 50-day average, but here we see the index is much more extended because it's in really in full force. So yeah, a little bit intermediate term. I would say that the 17,000 number, a very nice rounded value. I think that is the for someone who is looking for short-term investing, that zone is really important. So of course we will see maybe a little bit of support around this uptrending line, but after that we will see that we have this green triangle, and we have the 50 days average around the same supports around the 17,000. So I think that's a zone that is really important for maybe the short term, but also the medium term investor. The last chart I will bring up is the FTSE 100 of England. And yeah, there we see I've grabbed here a chart for the last 10 years. And here we see that England, like Belgium, is not able to create or to make a new high. So England is not that weak as Belgium, the Belgium index, but yeah, it's not making a new high like the Dutch, like the German, French, and the Netherlands index. So we remain in a very small band. It's not strange, but for an index, maybe you can say it's really yeah, that is since 2017, 2016, we see that the index remain in a band around the 7,800 above, and below we see a really good support around the 7,000, 2,000. 7,200, excuse me. So we are within a range of 10%, and that is really slow. So I think when we really see a big outbreak of this index, so we need to cross over that 7,800 index, and it should be really nice if we see it with a really forceful break. I mean, we should see some big candles with from where 2 to 5% even to really break over that important zone. So yeah, if I take a zoom in the charts, of course we can add some small trend lines like this. We like to overview a bigger picture because it's high. The analysis is more clear, more pure if you have a bigger picture. So yeah, you see here on this zoom from we can say it's about 1 year. That's 7,800 zone is really important for the FTSE 100s, and when we break that zone, we still have a little. I can add again a rectangle around this really nice zone around its number 8,000. So yeah, for the FTSE, the English shares, yeah, we still have some hurdles to take. So yeah, it's important to have a few times a week to look if the FTSE is able to cross over this really important resistance zones. Now, regarding the US S&P 500, we see the same evolution as like the Germany DAX, the French CAC, the Netherlands IX index. Namely, the index is making newer and newer highs. We look at great difference between the price and his 50 average and also his 200 average. So everything is very nice, smooth, looking very nice. Last time I've added a Fibonacci line between the low of October 2022 and the high of end December 2019. 1, and we have a target for the Fibonacci around the number 5,200. So I can add a red rectangle around this zone. So for the following weeks, it's possible that we see some resistance around that Fibonacci number, the 127 zone. So yeah, I think it's possible that the S&P could slow down a little bit around that zone, maybe for a few weeks, and after that it can continue his uptrend, or maybe it can turn back down, and maybe sometime it can test his 50 moving average, like you saw in 2021. Several times the S&P 500 visited again his moving average, who was looking upwards. So maybe this will be possible also. So for now, if I take a little zoom in the chart, for those who are really looking in a small periods, I would say I can add a green rectangle, a green support zone around the number 4950. So I think that's a key resistance for those who are looking for some weeks and eventually taking some profit. We will also see within a few days, I will think that the 50 days moving average will be rise a little bit around the same number. So short time, I would say the 4950 zone is important for someone who's more looking for intermediate term. I would say we still have the support around the 4800s. So yeah, I think that are the zones who are really, really important. If the index is able to cross over that Fibonacci resistance, what would be our next zone? So I will pull down my my chart, and I see that the next resistance level for Fibonacci would be around 5,600. So yeah, that could be possible within a few months for the S&P 500. If I take the next index, that is the Nasdaq 100, of course, the same evolution, really nice uptrend above S50 and 200 MA. I've added here a channel with this high and this high. I created a parallel line with this with the trend line made by those two tops. I always do that to be sure that the trend line that I've drawn is a good one. So when you draw a trend line and you make a parallel line of it, and you place that parallel line at another top, at another bottom, and you see that this line, doesn't cross many other tops or bottom, then perhaps the trend line you have drawn is not as good. So I have created first a trend line by using this top to this top, a parallel line, that is this line. So I place it to another bottom, and then I'm looking if this trend line is giving some support, giving some resistance to the index. And you see here that it's working really nice. And what is really great for this index is that was our channel, but the beginning of, I'm gonna use my crosshair, the end of January, beginning of February, it has crossed over this channel. So we are moving in a next phase, a more powerful uptrend. So we can add another trend line, another channel. So I'm going to use this bottom to that bottom. So I click on pencil, from there to there. I make it a little bit longer, like this. Next thing I do is I'm going to create a parallel line, and I'm going to see if this parallel line is good. So I'm going to place it simply on another top to see if this line is working as resistance. It's working as a magnet, if you want. See if this is a good resistance, good support, and I will use it here. So we see here that is resistance. Here is also resistance. It moves around this line, giving support, resistance, support, resistance. So I think this line is proper drawn. The angle of the trend line is really okay. So I would place the angle somewhere around this top, I think, because if it's this top, you see is giving here also some sort of resistance and support. If I prolong this line, it will be here, okay? So I will add the line somewhere around here. So this is my new, I could say my new upward channel. The angle is a little bit steeper, so that is really good. So if I make a little zoom again on the chart, I make this trend line a little bit longer to see where there is possible supports on a smaller time frame. So for a bigger time frame, I said I could say that the zone around the 16,500 is really important. For those who are trading a little to a smaller time frame, again, we have this 50-day moving average, and you see we have here that upper trend line of the first channel we have drawn. So yeah, it's around the same around the same niveau, around the same zone. So I would say the 17,400 is really important on a smaller time frame for the investors who is looking to take some profits. So yes, voilà, ça pour de Nasdaq 100. So I take next I will use and look at the forex, the dollar index. There we have drawn also some trend lines, some parallel lines, and really this parallel line is tested several times, and also the last few months, because this is a monthly chart. We're looking that the dollar is really, I pinch is really a great word, but it's always trading the last few years, but between those purple line and his 50 monthly average. So yeah, now I'm a little bit not really worried or confused, but we are now in the middle zone, zone of going really nowhere. So I think if the US dollar is not able to make a newer high on a smaller time frame, that means if it's not moving higher than 107, and if it isn't falling below the 10, I think we are looking, still moving sidewards. And not much is happening. If it goes over the 107, it could be going to maybe 114. Is it going below the 100? Yeah, it could even fall because then it even lost this 50 moving average. Then it's possible it will descend further to maybe 90, 92, where we see this horizontal support. And we also see the 200 days, the 200 months average around that 90 zone. So for now, not really much to say, moving in the same sideways formation. So yeah, that's okay for me. Why it's not okay? That's for the people who is following perhaps the crude oil, who's looking for silver and gold, because there the gold price is there the dollar price is really important. For the crude oil, we'll see that this is a longer time frame. I'm gonna make a little zoom. I'm sorry, I'm gonna make a zoom again. So like this, you see we are here in this against his resistance around the 80. We see that the 200 days is moving horizontal. That means on a longer time frame, there's really not a great movement, not upwards, not downwards. So yeah, on a smaller time frame, the 50 days moving average is moving a little bit upwards. So that is okay. So if you've been able to, that the dollar price gets higher than 80 and stays above the 80, I think it's a good time to look at some companies like, the big energy companies like Exxon, Chevron, and Mountain Oil, for example. Or we can look at some smaller companies. If it falls again below that 200 days, that's about 77. Then we could see another drop to the 50 days to around 75. And if it goes below that, maybe we're gonna test again that 66 support zone. That is really important. This is this rectangle. So yeah, short time, yeah. Um, it could be interesting if it's able to cross over the 80 and stays above the 80 and where maybe again goes to 90 or even 100. So I think that's an industry, a sector you must keep an eye on. Put in some alerts on the crude oil price or on some ETFs actions regarding the energy sector. If you take a look on the gold silver price, now you see a chart of the gold price. You see, between, can I use the crosshair? Last November 2023 till now, we are moving in a rectangle between the 2000 and the 2100s. So it's really a small rectangle. We have been able to push through, but what I like to see is if it continues to push and get higher than 2000 to 2200s. I know the gold price, maybe we are all looking to the Fed, looking when the Fed is gonna change the rates again, but lower the rates in this case for the gold price, because I think that really the market's looking at rates. And if the rates are going down, I think at that moment the gold price could really get a bullish view, and at that time we're gonna need to look to the gold and the silver miners. And I'm gonna show you now a very interesting ratio charts. Is the ratio charts about the gold and silver, not the gold and the silver price, but the two ETFs. Everybody knows the GDX ETF, that's concerning the gold mines, and the SRL ETF, it's concerning the silver mines. Here we see the chart over a period of 20 years, and we see very clear that there's a big resistance around the number 1.2. And we know about at that resistance again. So maybe that's a sort of key point, a point where it could be touched and returning again and going back down. So that needs to be done for the new for the following new weeks or months. And for me, it's really important that the ratio, so that's the orange line, is going downwards when this orange line is going downwards. Then we see a big bull trend in the gold and the silver mines. So what we need to see, if I do a little zoom on the chart like this, we see I also draw last few months a purple trend line who have been broken by the end of the middle of November. So that was very positive for the gold silver mines. But again, we have a resistance, a support, excuse me, around the number 1.08. So it's cracked down to the trend line, test that 108, but not been able to continue his downward trend. So that was not okay. Now it's testing back again that uptrend, and BAME is almost at that point to that zone 1.2. So yeah, for the gold and silver mines, it's really important that this orange line is not going above that zone. What I want to see now is that trend line maybe going to test that line, maybe going to the 1.2, no problem. But then it's really need to break down again downwards. And it must cross down below that 1.08. When that is the case, and we see a big volatility, what is big volatility? Big price movement, like here in 2008. That's what we need to see. Like here, like there, like here. That's the beginning of a new bull trend in the gold and silver mines. When that's not the case, I think the GDX of all the gold mines, silver mines can continue to follow a rectangle, a horizontal formation. So yeah, for me, 1.08 needs to be breaking down downwards. Okay. Then our last chart I want to show is the ratio between Cameco and the SP 500. We could say Cameco is some sort of a nice in between for the energy and for the commodities. So here we see also a long ratio chart, and it's really interesting when you have a rounded pattern like here. You always see when it's going to move upwards, it's almost not in a straight line. It's always something like this. Also, we have it's going downwards, and here when we go upwards, it's mostly always like this: back down, upwards, back down. Because in the downtrend, we always have a lot of lower lows, lower highs. So there's a lot of resistance. So for a company or for a ratio or for ETF or funds, it always takes time to to begin to start in a high and a big volatility uptrend. So that's what we're seeing right here in Cameco. So we see here also this movement, and here we see a big uptrend, and now it's pulling back. We also saw that in 2000. You see it's go up, down, up, down, up, down, a big upswing, and the pullback. So maybe we're going to repeat what we saw in the years 2000 to 2004. I'm going to erase my lines. What was also interesting, where we are now, I'm going to use Fibonacci. We see here some formation, a rectangle. I'm going to use this the high, Fibonacci to the low, something like that. And we see here that the ratio touch is 50% Fibonacci. Okay, gonna erase the Fibonacci. I'm gonna do the same thing for the present formation. So I'm gonna use, here we see some rectangle. I use the top. I'm gonna place at the bottom, something like that. Voila. And here we see around 50. We see now that the ratio is again around that 50. So maybe we are about to find some support for Cameco, for the ratio Cameco SP 500. So that also means we found some support for Cameco. And we see here, if I take a little zoom for the duration of the period. So it started here around January 2004, still about, we could say May for the bottom. So it took about 5 months. Yeah. So if I do a little zoom right now, so the top was again January. So it's possible that we could see some sort of bottoming formation just till also May. So that takes us still about 2 months to go. And if we then see some, that Cameco turns back again, then it's maybe the good time to again buy some uranium mines like Cameco, IFR, UEC, ISO, NXE, or you can buy some ETFs like URA, URNM. There are a lot of options you can choose. So yeah, many thanks, and I wish you a very nice week. And the next webinar will be the 3rd of April. Have a nice evening.